Hello friends, let us see some more practical problems on the topic of past adjustments. We discussed one practical problem in the last lecture. Let us see one more practical problem. Right? So it reads that on 31st of March 2014, the balances in the capital accounts of Eileen, Monu and Ahmed after making adjustment for profits and drawings were 1,60,000, 1,20,000 and 80,000 respectively. That means we are given the closing capitals. We have been given the capitals on 31st of March 2014 after making adjustment for profits and drawings. Right? Subsequently, it was discovered that interest on capital and drawings has been omitted. So they have committed a mistake, and what's the mistake? The mistake is they have omitted interest on capital and interest on drawings. It further reads, the profit for the year ended 31st of March 2014 was 40,000. So the profit that they have already distributed for the year 2014 is 40,000. During the year, Eileen, Monu each withdrew a total sum of 24,000 in equal installments in the beginning of each month. And Ahmed withdrew a total sum of 48,000 in equal installments at the end of each month. The interest on drawings was to be charged at the rate of 5% and interest on capital to be allowed at the rate of 10%. The profit sharing ratio is 2:1:1. Right? So they have committed a mistake and we have to rectify that mistake through a single journal entry. Right? So what they have omitted is interest on capital and interest on drawings. See, I told you for interest on capital is calculated on opening capital or the closing capital. Interest on capital is to be calculated on opening capital, but we are given the closing capitals. So what we will do is we will first calculate the opening capitals of the three partners. Right? So let us see. I'll say working note number 1, calculation of interest on capital. Right? For that, we will first calculate the opening capital, that is the capital we have on 1st of April 2013. Right? So for that we have three partners. We have partners Eileen, Monu and Ahmed. So what is the closing capital? We are given the closing capitals. What is the amount of closing capital? It is 1,60,000, 1,20,000 and 80,000. Now, to calculate opening capital, we will add back what has been subtracted and we will subtract what has been added. Drawings would have been subtracted or added? Drawings would have been subtracted from the opening capital. So what we will do is we will add back the drawings. What we will do is we will add back drawings. What is the amount of drawings? 24,000, 24,000 and 48,000. And what is to be subtracted? The profits. The profits of 40,000 were distributed in the ratio of 2:1:1. Right? So that means the profits were distributed as 20,000. We'll subtract this. 10,000 and 10,000. Right? So what we will get is, we will get the opening capital. What is the opening capital now? It is 1,64,000, 1,34,000 and 1,18,000. Now interest on capital at the rate of 10%. Interest on capital is to be allowed at the rate of 10%. It is to be calculated on this capital. Right? So interest on capital at the rate of 10%. This comes to 16,400, 13,400 and 11,800. So this is the interest on capital. Total interest comes to 41,600. Clear? First of all, we have calculated the opening capital, because interest on capital is to be calculated on opening capital and we are given the closing capitals. For that, we will add back what has been subtracted from opening capital and we will subtract what has been added. Right? Now, what is the second omission? Second omission is interest on drawings. Now we will prepare the second working note for that. Calculation of interest on drawings. Now, see, it says Eileen and Monu each withdrew a total sum of 24,000 in equal installments in the beginning of each month, and Ahmed withdrew a total sum of 48,000 in equal installments at the end of each month. What we will do here? We will apply average period method, because the equal installments have been withdrawn. Amount of installments is equal, the period is equal, so we can apply average period. Right? First of all, for Eileen and Monu, we will calculate average period. Average period is the period left after the first drawing and period left after the first drawing. They withdrew 24,000 in the beginning of each month. So what is the period left after the first drawing? 12 months. And after the last drawing, 1 month divided by 2. Right? 6.5 months. So what will be the interest on drawings? Interest on drawings For Eileen, 24,000 into 5% for 6.5 months. Clear? This comes to 650. For Monu, it will be same, 24,000 into 5% for 6.5 months. Clear? Now for Ahmed, first we will calculate the average period. He has withdrawn 48,000 at the end of each month in equal installments at the end of each month. So what is the period left after the first installment? 11 months, and after the last installment 0 divided by 2. Clear? This comes to 5.5. Now what will be the interest on drawings? Interest on drawings will be 48,000 into 5% for 5.5 months. This comes to rupees 1100. So these were the two omissions: interest on capital, interest on drawings. Interest on capital, always remember to be calculated on opening capital. If we are given the closing capitals, calculate first step, calculate the opening capitals. Right? Interest on drawings, amount withdrawn is equal at equal intervals, so we can apply average period. Right? So we have calculated average period for, first of all, for Eileen and Monu, and then for Ahmed. And for that we have calculated interest on drawings. Now we will prepare the statement of correction, adjustment, right? For that I will write Eileen, Monu and Ahmed. Debit, credit, right? So first of all, interest on capital, it is credited or debited to partner's capital account. If I talk of interest on capital, it is to be credited to the partners. How much is the interest on capital? It is 16,400, 13,400 and 11,800. It is to be credited. And 11,800. Interest on drawings, we will charge interest on drawings. We will debit the partners. It is a income for the business. So partners will be debited for interest on drawings 650, 650 and 1100. Right? Now the profits have been wrongly credited to the partners. Profits of 40,000 without providing for interest on capital and drawings were distributed among the partners, were credited to the partners' capital account. Now we will debit that 20,000, 10,000 and 10,000. Now what are the actual profits to be distributed? Actual profits, these were wrong profits. Now actual profits are, if I talk of 40,000 plus interest on drawings, what is the total interest on drawings is 2400 minus the total interest on capital, that comes to 41,600. So what we are left with is 800 profits to be distributed. Earlier we have distributed the profits of 40,000, whereas the actual profits which were to be distributed were only 800 in the ratio of 2:1:1. So we will credit the actual profits as 400, 200 and 200. So we'll calculate the net effect for all the three partners. Now this comes to 3850 as debit. This comes to 2950 as credit, and this comes to 900 credit. So what will be the journal entry? Eileen, account debit with 3850 to Monu account to Ahmed account. What is Monu? 2950, and for Ahmed it is 900. So this will be the journal rectifying entry. I am repeating again, please prepare proper journal in the examination. Don't do it like this, right? So this was the solution. Clear? First of all, identify what are the omissions made. Accordingly, first work on that omissions. In this problem, the omissions were interest on capital and interest on drawings. So we worked on these two things first. For the interest on capital, it is to be calculated on opening capital, but we are given closing capitals. So we will make adjustments to reach to the opening capital. On opening capital, we will calculate interest on capital. For the interest on drawings, we had equal installments, equal amount, equal interval. So we applied average period for Eileen and Monu. What is the average period? 6.5 months. And for Ahmed, 5.5 months. Accordingly, we have calculated the interest on drawings for that period. And then the statement. Simple. We have credited what should be given to the partners. We have debited what is to be taken from the partners. The profits which were wrongly credited, now we have debited them. Reverse. And what are the actual profits? We have credited to the partners' capital accounts. We will calculate the net effect. Okay. And we will pass a single journal entry to that effect. Clear? Very simple problems. Just read the questions carefully. Try to understand, identify what are the omissions, right? And accordingly work on that. You can now write this down. Okay.